Good evening, Ken Long from Tortoise Capital with the Market Daily Health Check, September 3rd, 2009. We had our first little day of buying support after yesterday's doji that you can see here. We still have a market that is in bull normal. ATR is low. And we have ADX stabilizing at 30, plus DI started ticking up a little higher than minus DI. The support level of 100 looks to be psychologically important. This little pullback and then universal entry today, to me, looks very, very favorable for a 4% melt-up opportunity here in the short term. This is the classic Connors and Rashke holy grail, where you had a very strong bullish move and then a pullback below the 20-day moving average, and now we've got the universal entry. Everything looks great. We still have plenty of room to the upside with Williams percent R at minus 80 and MACD histogram well below. I really like this setup for tomorrow, as you're going to see in some prototype systems I'm about to describe. First of all, bull normal, we're at 23 on 10-day index. You can see we're still in favorable territory. 10-day max pain candidates, I really like Merck for tomorrow, along with Caterpillar and General Electric. We are right at, let's see, 53% on market gap reversals. Slope of the regression line falling. No signals in overreaction or channeling. We did take 3 entries this morning in IWM, MDY, and ILF at the open. All 3 of them are positive on the day. Very well postured for follow-through tomorrow. You can see we're just on the very south end of bull normal for volatility. And all of the setups for the 5 days down from yesterday still look like favorable candidates for continued follow-through, as are the triple screen candidates. On the 10-day index overbought, oversold, we're always interested in things that are under 20. And so that's going to take us all the way over as far as Microsoft and that list for tomorrow. I'm going to highlight Merck. Daily Tactical. Merck has been a 10-day max pain, 3-day max pain. It's oversold on 10-day index. It's one of the big losers today, but it closed very strongly after finding support at the perhaps psychologically important level of 30. We took home 1R on that and then still have a position that we are willing to hold overnight. You can see the winners were in among the materials, with Caterpillar and Alcoa doing pretty well. In the commodity, silver continues to outperform gold. Coal had a nice bounce today as well. And yesterday there was a lot of things oversold on 10-day index, but now only a few are. In fact, energy has some possibilities there. And again, the DBC and the blended commodities and DBA, the agricultural commodity ETF, all in oversold conditions. I want to take a look at this at a new idea. This is something I was working on while I was in Berlin. I call it the 551. So we're looking for things that were positive on a 5-week basis. We know that's good heuristically. We want to close yesterday below the close 5 days ago. So it's up on 5 weeks, down on 5 days, and then puts in 1 daily white bar, and Williams percent R is less than minus 50. And here's an example of GE in that case. So it's still, we can see oversold. That's key. You can see this nice, I'm looking at this very nice little pattern in here. You can see the room to the upside, almost a 15 in General Electric. I just think that's very favorable, especially with this, what looks like to be very strong support at 13. I mean, there's 2-to-1 risk reward without even trying on that one. A couple other ones that give you the same general same general idea. And it's Caterpillar and Home Depot, both old reliables. And I think you can see the trading channel. We're still on the right side of fair value on both of these. And you can see they both fired universal entries, so we could have taken that position as early as today. But if you wanted to see a close happen, well, that's fine too. You can see the price is favorable with respect to the 50 and the 200-day moving average. Both cases, the Williams %R is below -50, which means it's below fair value on a 10-day basis. There's still room to the upside. That looks good. For that entire screen, these are sorted in rank order based on volume. You can see the markets in this condition, and lots of our usual trading suspects: Alcoa, General Electric, small caps, financials, Brazil, Home Depot, Caterpillar, DHI, and semiconductors. So couldn't be extraordinary. Here's the criteria for finding these at stock charts. Here's the maximum pain, the max pain story in Merck today. SPI did okay, but Merck was getting murdered. You can see on a 3-day basis, it's just horrible. But around 2 o'clock today, we observe it refused to fail any further and started actually to get less bad compared to SPY on a relative strength basis short term. And so zooming in, what you can see is a universal entry early after a series of 2 higher lows. Bought this thing at 30 at the peak of the quiet. Actually were able to cash a 1-hour trade with half the position. So we went with 1 bullet and a 10-cent initial trailing stop, and then cashed half the position. I'm sorry, with a 0.25 trailing stop. So for 1,000 shares. And that let us cash 500 shares for a 1-hour win during the day with those shares, and then we could have a 50-cent trailing stop overnight to manage our risk in a balanced way. So I like Merck going forward. 3-day down with a strong hook going into the corner. You can see the power of the 20-period moving average and why that crossover, which we anticipate a little bit, can be very favorable. So that's a quick look at the market health check, some couple new trading ideas, and a look at Merck's successful trade today and the setup for tomorrow. Thanks for your attention.